Tuesday, April 25th, 2017 at 6:30. Can everybody please rise for the Pledge of Allegiance?
Flag, United States of America, to the republic for which it stands, one nation, under God, indivisible, liberty and justice for all.
Presentations of the FY13, FY14, FY15, and FY16 audits. Anthony.
Okay, thank you. First of all, let me introduce myself. I am Tony Roselli, and I am the managing partner for Roselli, Clark & Associates. We were engaged to do the town's audits for 13 through 16, and we're here to go over a summary of the results. And questions go through the chair of the board. So if anyone has questions, direct them to the board, and we'll try our best to answer those questions. And so when I got a phone call in October from Kelly Pontbriand, your town accountant, and she requested if I was interested in doing 4 years of audits, I said, well, which town? What town are you that needs 4 years of audits done? And when Kelly said Templeton, I hesitated because Templeton called a couple of years ago to get us to do some help, and I researched it a little bit, and I was helping one of your neighbors down the street through some difficult times, so I thought it was a little too much for me to take on. So I was surprised that you still hadn't gotten things to square one yet. So thought about it, and I said, all right, yeah, we'll put in a proposal, and we'll see if we can help another town out. We've done a lot of towns that are in a similar situation to yourself, where you're having some difficulty with financing and internal control and so forth. So that was back in October, and it's been a journey. It really has. We had half my company was in here at times. We got to the offices at 8 o'clock in the morning. Some nights we left at 11 or 12 o'clock at night. We were working weekends back in our office just to get through this whole process. It was very, very comprehensive. There was a lot of work. And what you're about to hear tonight it's not pretty. I hope it's not surprising. Just from what I read about this and researched about this, a lot of those things we basically confirmed through our work and through our process. So I'm hoping the town can look at this as a blueprint. These are our problems. These problems were in the past. Let's work together and start to heal. That's what I'm hoping is going to happen after tonight, because things got better. We went 13 to 16, and 16 was much better than 13. So things did get better, especially with the accounting records and just the deficits that came up and things like that. So again, what's important here is there's a plan, which we'll go through at the end. Myself and the town administrator kind of went through what was important, what resources we could use to help Templeton resolve some of these problems. So again, like I said, what we're about to hear is not pretty. There's a lot of findings, there's a lot of issues, but let's talk about it. Let's figure out how not to repeat these things and move forward. That's my advice. I can't control what you folks do. We helped the town down the street go through similar issues. They're in great shape right now. They listened, they came together as a community, and they're in excellent shape right now. And I'd like to see the same thing happen here in Templeton. I don't see why it can't. So without further ado, we're going to go into the way I presented this is I did one management letter, because a lot of issues just repeated. So I did one management letter for all the 4 years. In the management letter, in parentheses, it will say if it's a 13, 14, if it's all years, so you can kind of see that. And so let's just go through what we're going to talk about here on this, in the contents. I'll do an introduction, then what we'll do is I'm going to walk you through my preliminary assessment, what we found on the first day and how that directed us to do our audit. Then I'm going to go real quickly through summary results. So preliminary assessment, how do we plan the audit, and then the summary results. And then we'll get a little more specific. We'll go through material weaknesses that we uncovered in internal control. We'll go through material instances of noncompliance with laws and regulations. Then we have a section on general findings, informational items, economically, where does the town stand economically, and what's the future look like, which will be covered by the future plan. So if we can go to the next slide. Okay, what I'd like to first do is just kind of educate everyone on it's been so long since the town had an audit done, back in 2012. I'm not sure if your prior CPA went through this sort of process with everybody, but I want everybody to understand, what do we do in an audit? Well, an audit, we have to follow a number of guidelines. The AICPA, which is the American Institute of Certified Public Accountants, they oversee us. But when we come to municipalities, we also have to follow the federal audit guidelines, which is called a single audit because you received federal money in 13 and 14. We also have to follow the rules of the Department of Revenue. And we also have to follow what's called this yellow book, the GAGAS, which is put out by the Government Accounting Office down in Washington, D.C. And that's kind of how we tailor our audit. It's called a yellow book audit. And in the yellow book audit, what they require us to do is understand internal control. What are your major transactions and what are your controls over those transactions? It asks us to look at areas where we perform extra risk assessment. What are the major areas? What are the risks associated with that? And to document that. And then it asks us whether we can issue a clean opinion or what's called a modified opinion. Modified opinion means we ran into some issues, which is what Templeton has. So Templeton has a modified opinion on its financial statements and also a modified opinion in its internal control because we had issues with material weaknesses and whatnot. And then finally, I just wanted to really get across to everybody that it's not a fraud audit. It's not a forensic audit. If items of fraud or issues like that come up during our process, then we need to deal with it. But we don't come into it with the fact that it's a forensic or a fraud audit, which means we're not looking at every single transaction. Otherwise, we'll be here for the next 20 years if we looked at every single transaction. So I just wanted to make sure everybody understood that. Any questions before we move on? Okay. Next slide. Okay, our preliminary assessment, basically, in the first few days, we found that it was a poor control environment. Basically, at times, just a complete disregard for internal control. Just things being unauthorized, just really not a good situation. And we'll get into some of the specifics as we move on. The leadership was poor. We just found that just in some of the documents and the authorizations and the way to do things, there just wasn't a good, consistent leader in the process. The town went through a number of town managers and interim town managers throughout the process. The accounting systems, again, you went from a smaller-based accounting system to what's called VADAR accounting. That whole conversion was really not done very well, and it caused a lot of problems to the point where the town accountant had to reconstruct 2013 and 14 almost from scratch. And so that led to a lot of the issues, because once that got reconstructed, it uncovered problems that weren't apparent because the accounting systems didn't tell you there were problems. Mismanagement, just in a number of areas, and we'll get into the specifics as we go. A lot of turnover in key positions. So you had a number of town accountants, town treasurers, town administrators, and what I find in these smaller communities is they don't view the financial positions as essential services, so they don't really, in my opinion, allocate enough funds to attract qualified people, to bring qualified people with really good experience to come work for the town. You have to offer something. And I see that the compensation levels are low. It's just not. You've got the town administrator situation, which is constantly changing, so no one's going to want to walk into that situation. It's just not a good position to be in as a potential town accountant or treasurer walking into that. And that's something that really needs to change, because when you put out a short salary, what you end up getting is someone that's not worked out in another community. So they're just looking to rebound somewhere. Or they've gone from community to community to community. They're kind of moving around like musical chairs and landing in places. Or you get the retired person that says, well, let me come in for a couple of days a week. But that's a good stopgap, but it's not a true solution to the issue. So that's something that I think you really need to focus on, is what's going on in your financial positions, your town administrator position, and how, to go forward, we need to make sure that part of our government is working. And clearly it wasn't for these years. It wasn't. So the processing of transactions we've talked about, just reckless. Just errors everywhere. Just in and out, in and out. Even the corrections that the town accountant was making, you had to, just to get to the answer, you had to just follow this entire process, and it was just so inefficient. Transparency. Haven't had an audit done in 4 or 5 years. Hadn't turned in balance sheets to the state timely. The state, when I contacted the state and went over some of these issues, they were like, well, we didn't know that. We didn't know that was a problem, because nobody told us. We didn't have balance sheets. Some of the things that we found should have been on the tax recap, and they weren't. And when I asked the state said, well, we approved the recap, but we didn't know about those things. So it's a full circle. And today was great. We had a meeting with the state, Carter, the town accountant, and myself. We went over your 2018 budget. We talked about it ahead of time. We've got a closed set of books, so we have a lot more information. And the state pointed out some things that may have to change in the budget, some semantical things that need to be moved around. But it was a great conversation, and everyone kind of knew what direction the budget was going in for 18. That didn't exist in the prior years and led to a lot of these issues. So what did we expect after we went through this process? What were our expectations? Well, we expected that the likelihood of material errors was probable. We expected that there would be noncompliance with laws and regulations. We thought that was probable. And we thought that there was a possibility that there could be fraud. We thought there was a possibility based on the control environment, based on the lack of controls. These were our conclusions as to what we might expect going into this audit. Any questions on this slide? Okay. We can go to the next slide. So the summary results, in the next 10 or 12 slides, we're going to talk about these in detail, but to summarize, there were 9 material internal control weaknesses. One is bad. One is bad. There were 9 here. There were 6 material instances of noncompliance with laws and regulations. 3 of these overlapped the internal control. They were overlapped. So all in all, there were 12 what I identified as material items that need to be addressed immediately. Some have been addressed, and we'll get into those. There was 11 findings that were just regular findings. We didn't rise those to the level of material. And within those findings, there's multiple findings within each subset. So those 11 findings might actually be 30 findings, because some of them had 6 or 7 items associated with them. There were appropriation if you can't hear me, let me know. There were appropriation deficits of almost $750,000. And what an appropriation deficit is when you overspend your police budget or your town accountants or town clerk. When you overspend what the town has approved, that's called an appropriation deficit. That needs to be dealt with in a legal manner. It never was. So these have accumulated over 4 years, almost 50,000. And there's a capital project deficit of $1.4 million that relates completely to the elementary school. So that's still out there on the books until there's a bond to raise that or it's raised somehow, but that's still out there on the books, $1.4 million. And that's after taking into account all of your MSBA reimbursements. And that deficit goes through basically today. So we actually didn't stop at 16 for the capital project. We took it all the way to March, April. Any questions? When we go into the detail, can we? Yeah, well, material, it's not dollars. Is your process so flawed that it could cause material errors in your financial statements? So, for example, if someone forgot to sign an invoice allowing the town accountant to approve the bill, that wouldn't be a material weakness. That's more of a finding. If a bank reconciliation is not done, that's a material weakness. And that's what some of the issues are, bank reconciliation. So basically, it's the degree, but it's not a dollar amount, because your bank reconciliation could be right on. In fact, we found that when we did them, they reconciled. But it's still a material weakness because they weren't being done, and they weren't being done in a proper way. Okay, okay. Yes.
There's an article on the annual town meeting warrant to rescind the vote on this project. Does that mean the town will be on the hook for that $1.4 million?
Yes.
It's going to cost us $1.4 million.
If that article is positive, if it's approved, the town would be on the hook for the 1.4. In some way, shape, or form, the town's on the hook for that.
And is the MSBA just going to say, oh, well, it's okay, we did all those reimbursements and we're going to let you have that?
I've never been involved in an abandoned project like that, so I'm not sure what would happen in that situation, to be honest with you.
More than 1.4?
It depends what the MSBA, right now I understand the MSBA is in full support of, they're very happy the audits are done. They're happy that everything's been quantified. They're happy that they know what the deficit is, that the town has a plan. So right now, every MSBA is supportive. What would happen if the project was defeated? I don't know. I've never, in 20 years of working with the MSBA, I've never seen it. So I couldn't tell you what the...
Right, it was just a... So, thank you, Tom.
The total expenses to date were 3.5 million. So there's another 2.1 million that we'll call contingent out there. All right, budget management. Really, no controls, nothing. Just the spending was... I like to see a situation where the town accountant is going to communicate with the department heads monthly and say, this is what you've spent. Do you agree with that? Because ultimately, the town accountant's the one that's going to say, hey, you're getting close to your budget, or you've overspent your budget. I got to shut you down. The town accountant cannot legally spend more than the budget. And back in 13 and 14, it got better in 15 and 16, but in 13 and 14, it was really bad. It was just, if you look at page 10 of 31, the management letter, page 10 of 31, sorry. These are the deficits. I mean, there is a lot of deficits, and some of them are not a lot, but you can't do it. You can't spend in deficit, and some are larger than others. But those are the deficits. You can see that the total over there is about $750. And you can see that in 16 there was just one for $87,000. Pretty much the departments were all on par in 16, which is good. You know, that shows me that there was at least an effort to get to the right answer in 16. But we really don't even need to talk about this. You just look at this page and say, what happened? You know, what happened here? Why did we have all these? Why was this allowed to continue? And this is one of the things that I know is being addressed. There's communication with department heads now. There's reviews of budgets. I know that Kelly is looking at, there's only a couple of months left in the year. She's looking at those budgets to see which ones are close and what sort of strategic decisions the town needs to make at the end of the year. So that's a good process that's happening now. So just to summarize the deficits here, debt service had $550,000. Now, what this was, the town took out money to do the feasibility study back in 2011. It was debt excluded, and the manner in which they took the money out was so that each year a part of it would mature, so that over 4 or 5 years, it would be completely paid off. But none of the debt went to town meeting or was on the tax recap. But the town made the payment. So we've got $550,000 in debt that just never really, other than the original article which says the town may borrow up to $1,050,000 to do a feasibility study, other than the original article, this was never appropriated on an annual basis, so it's a deficit. Later, we talk about how something like this can be resolved, and basically, this particular item can go on the DE1 and get resolved through the tax recap. Is how this, because that's what the intention was of this at the beginning of the process. But these expenditures have been paid. The debt's been satisfied. But again, none of it was approved. Benefits was $111,000. The benefits is really mostly your health insurance, life insurance. The biggest piece of it is your group health insurance. So there were some large deficits that accumulated to that. And then the rest on that page, if you added them all up, would come out to the $86,000. Any questions on this? On this piece? Nope. Okay. Oh, can you go back to that? I got one. Okay, down here. So one of the questions I asked, and no one could answer, so I had to go find out myself, was how did you have the cash flow? If you've got these deficits, and where'd the money come from? That's the first thing I asked. You've got all these deficits, so how are you able to have cash flow? Well, I found out that some of these ban and bond proceeds, do you remember $1.4 million that was borrowed for 252 Baldwinville? Does everyone remember that, $1.4 million? Guess what? That got commingled with the general fund depository instead of being put in its own dedicated capital project account. So guess what? Treasurer has got it in the general fund depository account, so town thinks they have $1.4 million in cash. They didn't have $1.4 million in cash. That was earmarked. So a lot of issues come up with that. You got IRS issues with your borrowing, arbitrage, and doing the incorrect thing with a borrowing. And imagine had you spent that all. Fortunately, the town had other revenues coming in, so it was replaced. But what if something happened that you didn't replace that? Now you're out the 1.4, and you still got a building, which, by the way, you sold. You got $1.4 million in debt, but nothing to show for it. So that happened. That's what's called a general fund overdraft. Now, how does this happen? Basically, if you prepare a cash forecast, okay, and I know cash flow was bad because you were having problems getting your tax bills out on time, and the economy was still recovering. So I know cash flow wasn't that great. But how do you prepare for that? You do your cash forecast. It's a function of the Treasurer's office is to do a cash forecast. Here's how much cash I have. Here's how much we're going to spend. Guess what? We're going to run out. We're going to run out on November 2nd. Raise your hand. We're going to run out on November 2nd. So what do? You got to go borrow. You got to do some sort of revenue anticipation. You got to do something. And the cash forecasts were never prepared because it looked like you had plenty of cash. Betterments doesn't have its own bank account. $1.3 million in the Betterment account. It doesn't have its own bank account. So there's issues with the Betterments. Community preservation account. There should be about $1 million in that account. The bank account only, during that period of time, only showed $400,000 to $600,000. So this is where the cash was coming from. So one of the things I've instructed the town accountant with the Treasurer's office is to figure out what the general fund shows for these balances and make sure the bank accounts reflect the same amounts. And in places where you need a dedicated account, you set one up. So Betterment should have its own account. CPC has its own account, but it should be brought up to what the balance is. So that's a project that the town accountant is hopefully going to have completed before the end of 17. Any questions on this? This answered a lot of questions for DOR too. They didn't know where the cash was coming from, so they were happy we went through this process. Okay, next page. Capital project management, one of my favorites. So 252 Baldwinville Road. And I'm going to go into the management letter to get the detail on some of this stuff. Page of the management letter, page 13. Page 13 of 31 of the management letter. So the town did a feasibility study for Baldwinville in 2011, $100,000. Spent over $400 on the building and borrowed $700 in State House notes. And then the 1.4 that we talked about to renovate the building. Then, subsequent to that, the town learned that there was hazardous waste or something that rendered the building unusable. The town had to sell the building for under $200,000, so over a $300,000 loss. The excess in $200,000 in borrowings stayed on the books, and that can't happen. That's an IRS issue with the borrowing. So that stayed on the books. It should have been reappropriated to some other project or used to pay down some debt, which is happening now. The 1.4, as we discussed, was put into a commingled bank account with the general fund money. So that leveraged the general fund. That's Baldwinville Road. Okay, elementary school was next. The elementary school, I think back in 2008 or 9, there was the authorization of the 50 million authorization came much later, but there was a feasibility study done, getting 60% from the MSBA. The debt service vote was successful under a debt exclusion override. So the town, so the fees, separate article. So this went, I mean, this project went back and forth. So for the first 2 years of the project, and I'm up on the top of page 14, for the first 2 years of the project, the actual construction went through the general fund, which is a no-no. That should have gone through the capital projects fund. There was an MSBA reimbursement that got used to pay back some loan money, which should have never happened. That should have just gone against the MSBA portion of the expenses. So we've talked about this with the Department of Revenue to see if they wanted to go all the way back to 2009, 10, 11 and unravel this, and felt it wasn't really worth it to do that, because you'd either have a deficit back then or you have a deficit now. So what you have in this project is this particular project, of the 1.4 million, 120 relates to this project. 120 relates to this project. So if we went back and unraveled everything, we'd end up with a 120 deficit in the general fund back in 2010-11. So either way, it's a money that has to be raised. So the DOR said, better off just dealing with it going forward, and we agreed with that. Okay, we talked about the ban repayments, so we don't have to re-talk about that, but that's the ban that got the payments weren't approved annually and weren't put on the DE1. The other issue is that because you let all the audits lapse, you couldn't borrow anymore for this project. So it kind of put things, you just put things on hold because you couldn't get a bond rating. I know the town tried to go to the Emergency Finance Board and tie on to the state's bond rate. That didn't work. The bank wouldn't borrow money unless there were audits done. So hopefully that right now is hopefully on its way to getting resolved one way or another right now, because the bank is at the point where they've looked at the audits, they're ready to move forward. The MSBA is comfortable with what's happened now that they have the numbers. So everything's on hold till the vote. So once the vote happens, that's what the prognosis will decide, whether you have to pay the $1.4 million or whether you move forward with the project. So that's the elementary school. The senior center, I didn't see a borrowing for the senior center, so I assumed it was from a bunch of various fundraisers and taxation, gifts, grants, because I never did see a borrowing unless it was done before 12 and 13. It was managed by a volunteer oversight committee, and get to the end of the project and can't get an occupancy permit. So hopefully that's getting resolved, and that'll be up and running. But my point here is that you need an effective, number one, you need an effective capital committee that knows how to run capital projects. You need people in town hall that understand how to borrow, where to put the money when they borrow, and when they need another borrowing. You need to get audits so you can make sure that you can borrow every year. Especially if you go forward with the elementary school, that's not going to be a 6-month project. That's going to be a lengthy project where you're going to do a number of borrowings as you need money. And this is just an area that needs to, again, this needs to just be improved dramatically. And it's, I think right now everyone's willing to give the town that's the past, let's move forward. But I don't think anyone's going to continue to make excuses for the town. So you have to effectively know how to manage these projects to be in the business. Any questions on capital projects? Back of the room. Mm-hmm. That's what the ban documentation said. That got paid back. It never got spent.
Can you just ask that question again? We're recording this, so we need to have it.
Yeah, my question, I'm Dana Blaze, 20 Turner Street, Otter River. My question was at 252 Ballinger Road, you said there's an additional $1.4 million in short-term funding to fund the renovation of the building. The money was borrowed, and my question was, if it was borrowed, where'd the money go?
So the question is, on 252 Baldwinville, there were two notes. One was for 700, and then one was for 1.4. The original 700 was for feasibility, for purchasing the building, and I think there was some design and other things factored in there. The 1.4 million was for the actual renovation of Baldwinville. You want to add something?
For clarification, 1.4 million was borrowed or was anticipated borrowing. The lowest bid that came in, and we have documentation for that, is $3.2 million, and the town chose not to go ahead with that.
Okay. So the money was rolled. It was outstanding for a couple of years. It got rolled over from one year to the next. I wasn't aware of this $3.2 million bid. The problem I had with it is it got put into a general fund bank account and then was used to leverage general fund operations. The $1.4 million has since been paid back. So that's clear now. It's matured. It's done.
Please stand up. Hand the mic, please. Hello, testing.
So you're saying the 1.4 was put into the general fund and it was used to run the town until it was paid
No,
back?
it was put into on the treasurer's side, not on the accountant side, it was put into a bank account that is a general fund bank account. So when it enabled the town not to have to borrow funds because they were using those funds. Eventually, the town got money from taxation and from the state and from wherever it had budgeted. It got the money. The money became available, and then Baldwinville Road got paid off. This was not done intentionally. It was pure not knowing what to do with the money when it came in. Whenever you have capital projects, you should put it in a dedicated account, and that's where the money stays, and you construct using that money. If you don't construct and abandon the project, you pay that back. Simple as that.
My question is, we did not actually spend the 1.4 on that building.
No.
No, you rolled, like you just said, you rolled other stuff into that account.
Right.
Loan. So it's kind of deceiving if people think that we spent 1.4 million on that building and we never did.
Yeah, it was like a credit line is what happened. It acted as a credit line,
But
right.
they're blaming the building. A lot of people don't realize that money didn't go for that building. It went for other capital projects.
Well, it didn't go for other capital projects.
Well,
It got paid back.
Road. Did they take the money for the Baldwin Road for that out of that 1.4 million?
No, that was a different
Well,
loan.
where did the rest of that money from the 1.4 go?
It went back to the bank.
It was paid back. It was paid back. You have a question, sir?
Yeah. Bob Dennis, Liberty Street, Otter River. I was under the impression in the first part of your talking about 252 that they used that money for shortfalls in that year. But you said we had a shortfall in that year, and I thought you said they used some of that money, but I guess I misunderstood you.
What happens is your revenue doesn't come in all at the beginning of the year. It comes in throughout the 4 years. So your first tax bill doesn't come in till August 1st.
Yeah.
That money comes in. But you're paying your retirement bill on July 1st. You're paying your school assessment starts. So that in towns that don't have healthy reserves, you run into times when you don't have cash because your revenue doesn't match your expenses.
So they tap that money.
So that money was inadvertently, I'm not going to say this is intentional, was inadvertently used to leverage the town's operations. Once the town got caught up in revenues and that note became due, the note got paid back.
But you said it was in a separate account, right? For that, it was thrown in the general fund at some
Into the
point?
general fund bank account. The general fund has a depository bank account, not on the accountant's books, on the treasurer's side.
No, I'm just surprised that happened because I know it was a big thing in town about not doing that project, not going forward with it. So I'm sort of surprised they didn't pay it off as soon as possible. But, okay. Thank you.
No, I was surprised too.
All right.
Any other questions on capital? Okay, financial reporting system. So we talked about the inability to have accurate reports so that you could have audits at the end of each year or prepare balance sheets at the end of each year. The biggest issue was going from, because the prior CPAs, and back in 2012, a balance sheet was produced and an audit was done. So the system back then worked. You know, somehow, there may have been adjustments and whatnot, but it worked. What happened was, I believe starting in, was it 13, that VADAR? Mid-13, the town decided to use VADAR. That conversion was a disaster. The accounts didn't come over correctly. The balances didn't come over correctly. So what ended up happening is you didn't have good information to do your audits and your balance sheets until Kelly came in 15 or 16, mid-15, and had to redo 13 and 14, basically from scratch. Am I correct? Basically from scratch? So it was all reconstructed. It's a material weakness because it caused you not to have information that you needed. Once everything was reconstructed, that's when all the deficits, that's when you realized there was deficits that had popped up. So any questions on financial reporting? That is much better now. The information coming out of the system is usable. The town can produce balance sheets for the DOR. It can produce balance sheets for the audit. So that, to me, that is that's done right now. That's something that's going to work moving forward. Over here, lack of documented policies and procedures. So there's really nothing in the town, and I know you've got a grant moving forward that's going to address this, but there's no manual that says this is how we do things.
So there's no policy or procedure at all at Templeton, correct?
There's policies and procedures in that now you've developed informal policies now. So you do have policies. There may even be memos going back and forth. So there's policies and procedures that exist now during this time frame. The policies and procedures, if they existed, they weren't being followed. They weren't there. Now, the state has offered communities grant money to take care of this and have, I think it's Collins or UMass, come in and develop policies and procedures that you can have, and you can use these for trainings. The important part to realize about policies and procedures is if I'm a new person coming into a town and the previous town accountant left and doesn't want to talk to me, I don't know how things flow. I don't know how things are supposed to work, so I've kind of got to do my own thing. And then that person leaves, and the next person comes in and kind of says, okay, I don't really have something to follow that's documented. So it's important to have a process that's documented that can go from generation to generation and be updated as you need to. Next page. Okay, the next two kind of go hand in hand. Bank reconciliations weren't done at all in 13 and 14. They were actually prepared. 13 and 14 were prepared at the end of 15 into 16, and 2016 was prepared in 17. It's caught up, right, at this point? So for 17, it's caught up. But for that entire period of time, they weren't done. So if someone decided to steal something, you wouldn't have known. You would have never known that that happened because these bank reconciliations weren't done. The second step, and the bank to cash book reconciliation is what's done in the treasurer's office. The next step is the treasurer balances all of their records and then goes over to the town account because there's two independent departments keeping track of cash so that they are a cross-check for each other. You've got the general ledger, which is kept by the town accountant, and the cash book that's kept by the treasurer. Once the treasurer has balanced the bank, there's a meeting of the minds, and the treasurer and the GL, town accountant, get together and make sure those numbers agree so that you've got cross-checks all around. So this process was broken. They weren't being done. They're being done now. At the end of this process, it's about $50,000. That, fortunately, is a positive amount. So it's revenue somewhere that needs to be found. I believe Kelly is still in the process of trying to locate that. But in the interest of completing the audit, we said, it's positive. Let's leave it. We'll cite it as a finding, and then while we're waiting for the next audit, hopefully this is something that can be found.
While we're talking about cash book and bank reconciliations, how many accounts would you recommend for the town of Templeton? I've heard we've had anywhere from 28 different bank accounts to 35.
Some of them are required. So, but a town this size should have probably under 20 bank accounts. So that's something that needs to be looked at. You can consolidate some of them. Just trying to get through this, that was one of the least things I was concerned about was how many bank accounts, just because of all the other issues that were here. But consolidating some of those bank accounts would help the reconciliation process. Accounts receivable reconciliation, again, that is the collector's accounts. And the town accountant keeps an independent set of accounts. So at the end of the month, they should be meeting in the middle and reconciling. What does the collector say they have? What does the town accountant say they have? That's an effective control to make sure that your receivables are being accounted for properly. That wasn't done for the entire period. So that is now in the process of being fixed. Towards the end of 16, it was being improved, and in 17, it's fixed. So a lot of these things here have been fixed with the employment of a town accountant. And then lastly, on the material weakness is just the OPEB. And I've basically told the town just to wait on this. It hadn't done it since 2009. That was when it should have been done, 2009 or 10, way back. And the calculations, the town purchased some software from a small firm, and the calculation to do this and taking into account all the years it was missed, it's just going to be too complicated. This particular requirement is going to change in fiscal 18. So I said, let's not bother doing it for 1 year. Let's not waste any more time on it. It'll be it's one of those modifications in the report, but it's just not worth the effort, in my opinion, to have it up for 1 year. When 18 comes along, let's do it that year, and we start from scratch, and then we'll keep doing it every year. Okay, those are the internal control weaknesses. Any questions on that before we go into laws and regulations? Okay, let's go to the next slide.
Wait,
Oops, someone? Oh.
As a former public accountant, I look at this and it seems like there's just a complete lack of internal controls that happen throughout the entire department. Do we have any sort of formal policies and procedures such as, like approval matrices, signature matrices, anything of those that you came along, monthly checklists that would actually take place within the accounting department, or is it just sort of a free-for-all as of now?
Basically a free-fall. Those things have begun to be developed in the form of memorandums. So there is a start to the process. I would suspect that once the Collins Center is done, they'll have a nice book that the selectmen can then adopt as policies and procedures, and it should have a lot of those things that you're bringing up in that document.
Okay, and then somebody who's never really dealt with government accounting, I mean, I've dealt with a lot of public and privately traded companies. Is there a certain guideline that they're supposed to follow, like in private or public traded companies they follow the COSO frameworks and SOC? Is there something like that that governs bodies that we should be adhering to?
There is a recommendation to follow COSO, but not a requirement by the Massachusetts. So there is a recommendation that, in the Yellow Book, which we talked about earlier, that towns should follow some sort of internal control framework, but it's not required. It's good business practice, in other words, to follow a framework like you describe. So,
and that's not happening here in Templeton.
No, but one thing I will point out is that in Massachusetts, it's what's called Massachusetts General Finance Laws. You have to follow those. So those are the groundwork to your policies and procedures. Is looking at the Mass General Law. The Mass General Law says, "Thou shalt not overspend an appropriation." Well, that should be one of your policies. When you get close to spending an appropriation, a discussion needs to be had with the department head on how to address this. That's the type of thing that I'd like to see a cross-reference back to the Mass General Law, which the Collins Center does a nice job with that.
And just for clarification, what was the name of that guideline?
The Mass General Law Finance Regulations. So if you put in MGL Finance Regulations into a Google search, the whole manual will pop up. All right, where are we here? Okay, so material instances of noncompliance. So procurement process. So let's go to page 18 of 31 is where the detailed discussion starts. And number one, just in the whole procurement process, you have to involve the town accountant. The town accountant holds the purse strings. The town accountant tells you how much there is. The town accountant has a vision of the strategic process in town. And if you're not in contact with the town accountant, you don't know if you're doing things properly. So one of the things I have in here is that let's involve the town accountant in every single procurement. It's important that they know what's happening. You could go through, say, Public Works goes through some sort of contract procedure to buy a vehicle or a truck or some equipment, and the expense comes through without the town accountant knowing about it, and it was never put into the general ledger, then that's a problem. So my number one comment here is let's involve the town accountant in everything that has to do with contracts. Second, the town accountant should have every single contract under MGL Chapter 41, Section 57, should have a copy of every single contract. And the town accountant should also certify that funds are available in those contracts. So none of that was done in this whole process in the contract procurement and whatnot. So specific issues we found were with Chapter 149, which is the Massachusetts construction laws. And I put a little matrix there of, this has changed a little bit, but there's a matrix there of what existed during these years. under the building construction laws. And I found what I thought was some violations of that. Let's talk about the senior center first. We'll go in chronological order. The senior center, there were 3 contracts that I questioned. One was for Blue Board. So the way it got contracted is there was Blue Board hanging and then Blue Board plastering. And it was given to the same vendor. So each contract was $9,000. So it went under the 10. Okay, in my opinion, that should have been one contract for $18,000, and you should have gotten written quotes and done a proper solicitation. There was no written quotes. There was no proper solicitation. And if it had been given to 2 vendors, I would have been okay with it, because you gave it to 2 different companies. But it was one project, plastering, hanging, and then plastering. So that was the first one with the senior center that I had an issue with. The second was the senior center floor. There was a cost of $29,608 that I was able to document. It was split into 2 contracts. One was below 10. One was below 25. The important thing to note about this is you actually did go out and get written quotes. So it wasn't just awarded to anybody. There were written quotes in this situation. It's just all of the other issues that go with 149 were not followed, which is the advertising and a whole bunch of things. What I imagine may have happened in that situation is that this was late fall. Had you gone through the proper process, it would have been the middle of December, and you probably wouldn't have been able to put the floor in. So I imagine there was probably some haste going on in trying to get this done. But there definitely was 2 contracts. It should have been 1. And anything that applies, if you look back on page 19, the middle column, over 25, anything in that column should have been followed. So there's a lot more work to it.
I would just like a clarification on a quote process versus a bid. I'm just a little confused. If you're going for a small job, let's say, you go out and get some required number of bids, let's say 3 quotes. Is that different from putting a project out for bid where you solicit bids from an unknown number of contractors? Could you just kind of explain that for me?
Yeah, it's all driven by amount. So anything under 10,000, all you have to do is pick up the phone, call 3 people, and use what's best. Once you get over 10,000, you actually have to go out and get written quotes. Once you start getting into the 25 area, you have to start advertising and following a whole bunch of different rules. So it's driven by the amount of the project. So if you're buying a box of copy paper, best business practice says, let me check Staples, let me check, some of the other places, but you don't have to go through a thorough process. The emergency railing down at the senior center was split into 3 separate contracts, identical to the senior center floor. The contracts were 2 were below 10, 1 was below 25. Again, you did get written quotes, so the lowest bidder was selected in this situation, but all of those things that apply when it's over 25 were avoided. I just wanted to note that also in both of these situations, and I think it was Jeff Ritter at the time, his name was whited out, and then someone from the Board of Selectmen signed those contracts. So that tells me that Jeff was uncomfortable doing that, because the other contracts that were signed on the same day were signed by Jeff. So it looked like he was signing what he was comfortable with and not signing what he wasn't comfortable with. So I would note that those were in the in the files. Okay, the second project that we had a problem with was the town hall. There was a total of $107,000 in project costs, and they were all awarded to a single contractor. There were no written quotes for any of the work performed. There were 7 separate contracts written. 4 of these were for $98.50 and 2 were for $92.50. There was one contract for $24,009. No quotes, no written quotes, no solicitation. The one for $24,900 was for bathroom renovations. It ended up costing $28,250. So again, a lot of the $149 things over $25 were avoided. Also on this one that was made up of 3 $98.50 was originally written as a $28,000 contract, and that was voided. And then 3 contracts for $98.50 were written. So I understand the town administrator. I talked to the town administrator about this during the audit. I understand he's contacted the Inspector General just to, it was something that came up. Let's discuss it. So the administrator has told me that the Inspector General was satisfied with a training, and that training has happened. So that's just where that stands at this point. Any questions on procurement?
Excuse me 1 second, Dana Blazian. Were any of these projects, either senior center or the renovation of town hall, were these? I also see that they're also supposed to be prevailing wage no matter what the cost of the project. Was any of those projects paid prevailing wages? For the prevailing wage for all these projects that you talked about, I see in your on page 19 of 31 that the rate's supposed to be paid for any project, no matter what the cost is.
Yeah, I didn't get that deep into it. Once I started finding all these problems, let's let the Inspector General handle it, because some of these things the Inspector General has a different opinion than I have. So we'll see where that evolves. Any other questions on procurement? Okay, so we've talked about this a lot, but just so we can skip over this real quickly, but submission of required DOR reporting. You're supposed to submit a balance sheet every year. It allows the DOR to properly certify your free cash and to certify the tax recap, because it allows the Department of Revenue to see what deficits you have. So that didn't happen for any of the years. So now you've got all these accumulated deficits that you have to deal with in December of 18. You're going to have to deal with these now, because you didn't deal with it every year when it was 200, 200. Now you've got 800, almost 800,000 to deal with. There was one year where the Schedule A was submitted late. Now what happens when you submit the Schedule A late is the state doesn't give you your money. They don't give you your third and fourth quarter local aid. So that was one of the years where the town didn't have the state's cash. So that's a situation where you ran into a little cash problem and may have, went back to the $1.4 million that was hanging around. So that's the DOR. It's important to get it done. What we've done, the plan we have for this year is books are closed by the middle of August. We start the audit end of August. Audit done by September 30th. DOR certifies free cash by October 30th so that everything's ready for town meeting. And from there, we do the tax recap. That's the plan for this year. Okay, the single audit. If you receive over $500,000 in federal funds, you're required to have an additional audit, which is called the single audit. In 2013 and 14, you received close to $1 million in community development money, which was put to good use. I did a lot of nice things with that money. The single audit was never done. It was never submitted. So what happens in that situation? It risks future federal funding. The town was not able to apply 15 and 16 for any sort of a major grant because of that. That's all been done. I think is it submitted? It's submitted at this point. It's 4 years late, so the town can get back on, hopefully on good standing with the federal government so that you can get some more grants. So, any questions on this slide?
How long, like, once they've been submitted, how long will they make us wait to even apply for any community development?
Well, you can start applying. You can start applying. They may say, "Wow, you know, what happened here?" The good news is there were no findings in the single audit. That's the good news. There was no major issues with the single audit. That was run really well, and I was happy with that. So, so that you'll have that on your side, and yeah, you can begin looking into receiving funds and applying for those.
You said that the contracts should be with the accountant. Does that include the enterprises also, or such as sewer, water, et
Sewer,
cetera?
definitely.
Definitely?
Water and light under the special legislation that those two activities have are probably exempt from that. But sewer, definitely. And I'm not certain.
Why? Because they still have to come to town meeting to go for money. They need a town meeting vote. Shouldn't the paperwork be where people can find it?
Well, that would be a good question for the Inspector General. I usually don't see, first of all, this is the first time I've seen a water department
Yeah, water and electricity don't mix.
organized this way, but light departments are usually separate, and I don't see where the town accountant has those contracts in other towns. I don't see it. So it might be a good question just for either the Department of Revenue or the Inspector General. Do they have a hotline there for questions like that? Am I required to oversee that? Yep. Okay, next slide. These are general findings. So the betterments. The betterments we found, okay, there's this 75-25 rule. I couldn't find where what gave that any teeth. But right now, 75% of the sewer work is paid from the tax bill and 25 from betterments. So the town bills for betterments, collects it. Some people pay it in advance, so you put that in its own bank account. You don't commingle it. Put it in its own bank account. What I found that the 75-25 didn't happen every year. When I looked at the DE1s that are filed with the state, it was inconsistent. It was 80% some years. It was 80-20. It was some years the whole thing wasn't raised. So there was just a complete. I wasn't even sure how it got to the tax recap the way it did. There was no rhyme or reason. In fact, none of the four I looked at were 75-25. They're 70-25 now, because that's how it was done for this next budget. What's happened is there's extra money in the betterment account, and we talked to the Department of Revenue about this. And the Department of Revenue, there's what's called the Municipal Modernization Act. Prior to the Municipal Modernization Act, the betterments were just available money. So it was available money for debt. So the 75-25 didn't really matter. It's whatever the town meeting decided. This is what the Department of Revenue said. So what they recommended is that any excess money that's in the betterment account because of the inconsistent manner that it was done leading up to now should just be amortized over the remaining life of the debt. So I'm going to help the town come up with an amortization schedule of what's in the betterment accounts, what's in debt, and how that should be allocated each year. That's going to go into effect for fiscal 19.
And when you're talking about the debt, you're talking about the sewer debt?
Sewer debt, yes.
Just sewer debt?
Yes.
Okay.
And there's a portion of the sewer debt, just for the public's awareness, that's subsidized by the state under the MWCT program. So there's a portion subsidized by the state also. Ambulance write-off policy, this is just a real quick finding. There was no policy on how you write things off. So just to avoid any sort of a bias towards who you write off and how you write it off, there should be a policy. There's plenty of them out there that are available that you could customize for the town of Templeton. So this is something you should work on with the fire chief and come up with a policy. Most towns will, in their policy, is this a strong fire chief or a weak fire chief? It's a strong, so he can write these off on his own, but a lot will come before the selectmen with their list, just to avoid any issues of conflicts or anything, and say, this is the list, and they go before the Board of Selectmen, and then it gets approved that way. So there's different ways you can do it. Sewer department, there was some, the reporting of commitments is very inefficient. Right now, the sewer bills collects, the town accountant gets information from the collector on what's been collected, but almost has to guess what the amount billed was. So there's like this thing going on, like at the end of the year, to try to guess how much was billed and kind of back into the balances. So my recommendation is that the commitments, when they go out, are sent to the town accountant also, so they can properly record those in the accounting ledgers. At some point, I'd love to see the entire collection process come into town hall. That's what the collectors are for, and I'd love to see that whole process come into town hall so that the town is actually collecting sewer bills. And then backup and recovery. Some of the files we were trying to get to were lost because of a flood back in 13. So it was a good, this was a good instance to... In the SOAR offices. It was localized. And, the files were, there should be a backup and recovery file so that you can get to those things. So, next slide. Indirect costs, just formalize them, get sign-offs. And one thing that was not being done is you'd vote these indirect costs, but if the sewer fund or the water fund, mostly the sewer fund, didn't have the money, the transfer was never made. So it would put the deficit in the general fund. What I'm suggesting here is once the town meeting has said, we're transferring these, and it's on the tax recap, that transfer gets made, and the deficit should be in the sewer fund, not the general fund. So I think these are caught up at this point because the sewer revenues have been better, but I think they're caught up. But going forward, just before the end of the year, make the transfer. Otherwise, you're going to get hit with a free cash problem at the end of the year on anything that hasn't been transferred. A capital asset, basically that's all your vehicles, your trucks, your equipment, your infrastructure, your buildings. It's always been tracked outside. The CPA firm prior to us tracked it. They sent us an Excel spreadsheet, so we kind of continued from there. But the town should have its own inventory of equipment and what exists in each department. And it's a good idea to do the inventory and then tie it to what we have on that Excel spreadsheet, because I don't know how accurate that Excel spreadsheet that's been getting passed around for the last 10 years is at this point. So I think it's a good idea to really look at it and say, okay, what exists, what doesn't exist, and get that up to speed. Yes? Insurance, capital planning. It's good for capital planning, too, because on there, you'll see the age of vehicles. You'll start to see when you need to replace things, so it's really a good thing for the town to track. The payroll withholding accounts, complete mess. There's some deficits, there's some positives, but they were never handled properly. There's a plan to shut these down for a year. That's going to, the employee withholdings are now going to go through the budget, shut the withholdings down for a year to see, so at the end of the year you can determine what's real and what isn't, and then do an adjustment to fix them, and then go back to the normal way of doing things. And I agree with that approach. If anyone is looking for my support on that, I agree with that. The tax recap, just a lot of errors, deficits not raised, DE1s incorrectly calculated, revenues weren't, there was one year where revenues were in the special revenue fund and also on the tax recap, so that causes revenue deficits. So again, I think the town has a good handle on that right now based on the conversation we had this afternoon with DOR and going through all the different spots on the recap. There were errors in the past and how those are not going to be repeated going forward. Okay, next slide. Compensated absences that's basically your vacation accrual, your sick accrual, what do you owe people? And that hasn't been calculated in a long time. So that's something that needs to be figured out, calculated. So do we really know if so-and-so has 8 days left or 6 days left? We don't. You know, we need to control that better. It's essentially on an honor system right now. All right, CDBG, part of the CDBG project was fixed assets, constructed on behalf of the water department, but nobody communicated that there was $500,000 worth of work to the water department auditors or their bookkeeper accountant. So that never showed up on the water department's books. So that's something we are going to talk to their CPAs about adjusting for the next fiscal year. And then the treasurer collector, I didn't want to list everything here, but if you look at page 28, on the management letter, 28 to 31. There's a number of things I would expect a treasurer's office, collector's office, to be able to do. They're bulletized here. There's about almost 20 items that relate to, if you want to go through them one by one, we can, but there's just a lot of information there that hopefully you can read, and because we'll be here for the next hour if we want to go through each one of these. Put it this way, there needs to be a lot of improvement in the office. So let's go to informational items. Just threw down a few things. Yes.
What happens, we're the advisory board, and I've spent some time around town hall, when everybody knows that a department's not doing well, and no one in authority will do their job. We end up in a horrendous mess. What are we supposed to do about it? There's nothing we can do.
Well,
we should not be sitting here right now with this mess. This should have been taken care of a couple years ago, but it gets so political because you get such a little group of people.
Mm-hmm.
And as far as town hall goes, 99% of all that work was done with volunteers and with donated stuff. So the contracts that went out were not from any of the volunteers. They were from a department that should have known better.
Yeah, I think it goes to periodic job performance reviews, consistent leadership. When you've had, I think, what, was it 2010 or 11, your first town administrator, and you had Jeff Ritter, who was here for 2 or 3 years. And since then, it's been this interim process. And it's difficult to establish any sort of leadership when you're in a situation where you're constantly in this interim situation. And you know, once that's resolved, and you need a strong person. And I don't think the salary is going to bring you a strong person, to be honest with you. But so you may find yourself in this situation for a long time. Once that is established, though, and you have leadership, then you have performance reviews. And those should be documented, and they should be discussed. And the individual should have goals and objectives of what they want to do at the beginning of the year. And then you have a performance review in the middle of the year to see where things stand in the end of the year. That's how all this kind of works. And then if you identify someone that's not performing, how do we help them? The state of Massachusetts has a number of trainings over at UMass Amherst for treasurers, accountants. I teach a lot of them. They have them. There's a gentleman by the name of Mark Abrams that runs a town accountant boot camp. There's treasurer courses. There's a lot of things. So, you know, we look at a person and say, how do we help them? Let's send them to some trainings. Let's see if that works. If that doesn't work, you start putting some warnings in the files, and you go through a process. And I think that's what has to happen. If they're not qualified, money doesn't help. I'm not sure. The number that I had heard about before, I don't know what it is now, but what it was before wasn't going to, I don't think it was going to attract anything strong. But that's where it starts. It starts with the town administrator. That's your coach. That's your, you know, if you're looking at an athletic situation, it starts there. If you've got a constant revolving door of coaches, what athletes are going to want to play for that team? They're not going to. No matter how much money you offer them, they're going to want to go to Miami. They're going to want to go somewhere else. And I think it's really important to have a strong leader. And then from there, you build your team around that leader, and you establish some consistency. And the results are here, and the blueprint is here. Let's do it. Let's do it. Winchendon did it. Let's do it. Why can't we do it? Let's go do it. Let's get together. Let's work as a team and hammer this home. Let's be proud of what we can do.
The DOR wrote a report, okay? That was in when? 1999?
2009.
2009. 2009. Half the stuff they told us to do hasn't been done yet. You know, I want to be optimistic.
Because you've had 5 town accountants since then. You've had 3 or 4 treasurers and 3 town administrators.
And no leadership.
How can it get done? How can it get done? There's some good opportunities out there that I've talked to Carter about, some thinking outside of the box types of things. Phillipson right now is, they don't have an accountant or a treasurer. Can we work? If we combine both salaries, maybe we can attract someone really good that can help both towns. It's a 1-day-a-week position over there. It's 4 days here, so why can't it be a 5-day-a-week position for somebody? There's some good out-of-the-box thinking that we talked about this afternoon that you can take advantage with other towns. You can regionalize things. When you pool your resources, you can attract better people and more qualified people. So there's hope, I hope.
Templeton, maybe this is down the scope of what we did, but does Templeton, with
Well, Kelly's willing to work at 20% less than what she's worth. This is a special woman. I don't know if anyone knows that. What she does and what she's brought to the table, you guys should be thanking her 20 times a day. She was there every day with us till 11 or 12 o'clock at night, and she beat us to the office. She beat us here every day. She's owned this process. She wants to see it work, and you're very lucky to have her for what that compensation is. You're very, very lucky, and I think she likes the fact that what she's doing is improving a process and hopefully improving the lives of 8,000 or 9,000 people that live here. And if you can get more people like that, you're going to have a good winning team. And that's going to be difficult. It's going to be difficult to do that. It really is. But that's a really important position, town accountant, because now at least you know what your funds are. If the treasurer's got something in the wrong bank, the accountant can nudge her and say, hey, that's the wrong bank. It's a transfer. You just make a transfer between the banks. There's no, the GL is the Bible. That's what tells you what you have, what town is going to, from an accounting standpoint, is going to do well. What we normally like to see, which is what Winchendon had a book like this 2 years ago. What they did was they put everything on a Gantt chart. Okay, finding, and then they listed all the findings, and they prioritized what was most important to least important. And then they put scheduled time of completion. They had periodic meetings. They established an audit committee. And they had periodic meetings to go through where do things stand. You know, what have we fixed on the man? And then that audit committee reports to the selectmen quarterly and says, okay, here's the management letter. This is what has been done. And then we come in once a year to verify what the audit committee has done. And it's worked really well. They're down to a handful of findings now. They're recovering financially, and they're doing a really nice job. And I'd love to see something like that happen here. So real quick here, a couple of real quick items. De minimis property tax, I had made a recommendation that pick over 100 communities, mostly small ones. They don't send out bills for $16 and $8 and $6. It just doesn't make sense. It causes more inefficiency in the collector's office than what it's worth trying to collect it. And those are usually the ones you can't collect. So the state allows you to exempt taxable property up to 10. So when you take the 10 times the tax rate, it's a very small amount. You can exempt that, and the studies out there show that that eliminates a lot of bills for a very, very, very small amount. And I've talked to the assessor about it. The assessors are on board with this, and they're making a recommendation, I think, for what, $5,000? To exempt up to $5,000, and it's got to be approved by the town meeting. So I think that would be a good thing to promote some efficiency in the collector's office. Municipal data breach. You guys all have to remember that you've got a fiduciary responsibility to protect a person's privacy, whether that be a taxpayer, whether that be an employee. And there are constantly, and you hear it all the time, there's constantly hackers trying to get in and get that information because they like to sell it. So what I had recommended is at some point the town should have an independent, not my firm, but there are independent, what's called municipal data auditors out there that can come in and tell you where your vulnerabilities are in the system. I've had situations where hackers have come in, and there was one small town, that didn't balance their cash book. And when they went to balance it, they were out $60,000, and they couldn't figure out why. They traced it back to a series of strange withdrawals that had gone out. So they called the police because no one in town had done it, and the town, what happened was the banks had identified that a person was able to get the town's username and password and direct the $60,000 to a bank in South America. So they called the state police got involved, the FBI came in and said the situation in this town is like going on vacation to Florida, leaving your door open and putting an ad in the paper saying, I'm in Florida and my door is open and I won't be back for a week. That's how bad it was, that situation. So what I recommend that my towns do is, you know, spend a couple of bucks, go through this data process just to make sure that you don't have any holes in your system, that your firewalls are solid, and it's not something that I'm saying that the data processing people are deficient. It's just an extra check on that. Fraud prevention measures. The Mass General Law allows the town accountant, and they're the only person in Mass General Law, that can actually go into departments that handle cash and make sure that the processes are sound, that the turnover processes work, and that the cash in the drawer on hand equals what they say it is. So what I recommend in towns, and here I don't know if you're going to have time unless you expand the department a little bit, is to do periodic checks. So, for example, if you go into the town clerk's office, not to pick on the town clerk, they process dog licenses. If you did 100 dog licenses and they were $8 each, you should have $800. So that's the sort of check that you can do. You know, building inspector, like I said, town clerk, police details, just different things that you should be doing that you might not detect fraud, but if the townspeople know that philosophy is happening, that people are coming out to check, it adds as a prevention measure. Before they put that money in their pocket, they're going to say, oh, well, maybe town accountant's coming today, so I better not. They might think twice about it. As part of that also, I'd love to see a fraud policy, which hopefully the Collins Center will identify and just distribute that to everybody about what is fraud, what's not tolerated, and that the town will prosecute. Just what's the process when you have a fraud situation. Then new pension standards, we don't have to talk too much about that, but that's just a new liability that came on the books and really doesn't affect anything operationally. Municipal Modernization Act, I suggest anyone that's doing anything, decision-making, get familiar with that because there's a lot of new things in the Municipal Modernization Act. Those are just some informational items. They're not findings. They're just informational items. Next slide. All right, so I wanted to talk about where are we at economically. You'll see that, and these are your reserve balances, which is your stabilization plus your undesignated. So the town's done well, and totally by accident. But at the end of this, and I told people when I went into this audit, they said you're going to find that they're going to be negative, they're going to need deficit legislation, they're going to need this, they're going to need that. I said, you know, I've gone into these situations, and because free cash hasn't been certified, it's never been spent. So sometimes it accumulates, and you end up with something at the end. And what's contributed to this is the local economy has picked up. So when you do your tax recap, you've actually collected more than you anticipated. The tax sale that you did was about over $500,000, I think, in the end. That contributed to this. And just there was some things that, like court fines, that were put in the budget, but it was money you were getting every year. It's going in this year's budget, unfortunately, as a revenue source. But in the past, it hadn't been, so that helped build this. So you can see that in 13 and 14, there were some issues. That's when all the deficits most of the deficits occurred. When most of the major problems occurred was 13, 14. So you can see that crest there, and it's come back. Now, I did a what-if calculation so that everyone doesn't run out and say, whoa, we've got a lot of newfound money, this, that, and the other thing. I did a what-if calculation that what if we didn't have the capital projects deficits, because the DOR will reduce free cash for capital projects. Let me eliminate that. What would the free cash have been for 16? I did a calculation based on the numbers. And I estimated that it would be between $800,000 and $900,000, the free cash number. However, you've got deficits you got to take care of. So at the moment, you don't have a lot of access to free cash. You may in the fall, after 17, after everything clears out, you may. I'm not sure. You'd have to look at the books at that point. But right now, if the books closed right now, and for 16, if the DOR did a free cash certification, most of that free cash would be dedicated towards deficits and taking care of things. So it's not quite ready to be used as any sort of a windfall or anything in town. But I was happy to see this. Can you go to the next slide? So what we do is we calculate a reserve ratio, and the state average, and reserve ratio is what are your reserves divided by your expenses. The bond rating says if you're at 15%, you guys are good. The state's average is right around 9%. You're almost right at the state average, which I thought was really good. And this is something I'd love to see you maintain. So the good part about this is we've got a lot to do out of this book, but fixing the finances really is not an immediate issue because you have this to buffer you through this close in 17. Any questions on those two slides? Sure. The reserve ratio is what's called the So let's step back. If you projected $800,000 in motor vehicle revenue and $1 million came in, you got an extra $200,000. Building permits, if you projected $80,000 and $100 came in, you got a $20,000. When you add all those up, that gets added, that becomes part of free cash when you add those things up. In your budget, say your police budget is $800,000 and you spend $680. Well, you've got a surplus of $120 at the end of the year. That becomes part of free cash. So when you add all those things up, that becomes free cash. You submit that to the Department of Revenue, and they certify that. So they'll say, okay, here's the balance sheet. Here are your ins and outs. We say that this is free cash. So what I do to get to the reserve ratio is I take that free cash, I add the stabilization fund to it, which there's about 110 or so thousand in the stabilization fund, and divide that by the expenses, the annual expenses of the town. Does that make sense? So let's go to the next slide. So this is just a summary. Reserves have increased. We talked about tax assignments. So these are some of the things we've already talked about. At the bottom sentence there, the town was fortunate because this could have gone the other way. It could have gone the other way. There was you could have ended up in a bad situation needing deficit legislation. Here's the future plan. All right, so let's really focus on this because this is the medicine. This is what we have to do, at least on a financially going forward. Okay, so you got to get through the town meeting. So wherever the chips fall there, I don't want to get involved in politically what's going on there, but wherever the chips fall there, you're either going to have to issue a ban to cover the deficit, or you're going to be able to move forward with the project. First Southwest has told us that the banks may be willing to give the town up to $5 million, which is a good start. They haven't done that yet because they're waiting for the town meeting vote, but then what happens is it goes out to the banks and they bid on it, and that's how you get your rate. So that's not known yet. But they have said that the town could, if the vote is defeated and the project goes forward, the town could have access of up to $5 million, which will cure your deficit of 1.4 and give you 3.6 million. Now, the state says don't go out and spend that yet, because what that will do is it will start to establish creditworthiness. So let's hold off, because we need to determine if we can get the whole nut, which is about 22 million, is the town's piece is about 22 million. If we can get the whole piece, then we're good. We can start construction. So that's step one. We talked about step two. Was there a question in the back? I'm sorry. A ban is a bond anticipation note, so it's what happens before you do a bond. So it doesn't tie you in long term. In case something happens, it doesn't tie you in. Then you're on the hook for the interest, basically. Next, we're going to close. We've talked about this. We're going to close the books as soon as possible after June 30th. The goal is mid-August. Complete the audit in September and have free cash certified in October. Okay, once we've got free cash certified, hopefully there's enough, and I think there's going to be, to cover the well, actually, let's go through the deficits. The 2018 DE1, which is part of the tax recap, you're going to raise the amounts you should have raised back in 13 to 15, should be raised in 18. There's a deficit of $87,000, which is just a formality. There's going to be an article on the town meeting. It's coming out of what's called the Restricted for Debt Fund, and that is the fund that was set up when you sold the building. I don't know if you all remember selling 252 Baldwin Mill Road. You got about, I think it was just around 200, 175. That is where this money's coming from. So it's not a real deficit. It just didn't go through a town meeting vote, so it's got to go through a town meeting vote. And then the remaining deficits, which are about 212, need to be certified with free cash. Future budgets are going to include a different betterment tax amortization of the sewer debt. And then the next page. Begin planning. The fiscal 19 budget. Let's not wait. Let's start looking at it. Let's plan ahead. Let's do our forecast. Let's see where we're at in 19. While we're approving 18, let's start thinking about 19. It's important. And then solve the town administrator situation, and let's address the findings related to the treasurer's office. I think that's it. I'm out of breath. Thank you. Oh, wow. No, that's separate. They'd have to raise that on their own through user fees or some other, unless the town was generous enough to fund it, if there was a deficit. Right, that didn't include anything with the sewer fund. All right. That's it. Am I free to go? Thank you. Yep.
I just wanted to mention before you leave that in the fall town meeting, there will be a section of articles that will clean up all of these appropriation votes, all of that. You're not going to see that at the annual town meeting. We need to make sure that everything is covered. We want to try to do it all in one meeting, so we'll have that ready for the recap, so we have all the votes that we need and everything will be cleaned up. So just wanted you to be aware of that when he mentioned, there would be articles. If you don't see that on the annual town meeting, that's why. It'll all be cleaned up in the fall. Thank you for coming.